And right now we're going to talk to our man Steve Rhodes. And folks, you can check out Steve's outstanding daily newsletter, Mastering Probability, right under the newsletter tab on TFNN. Every newsletter, folks, comes with a 30-day money-back guarantee. It's only $149 a month, and you get, well, I always say it every time we talk to Steve, I think it's like 9 or 10 webinars. 7 extraordinary workshops is what you get in there, folks. Check it out. You can watch all those during the 30 days, and you get Steve's updates every morning and afternoons when warranted as well. Steve Rhodes, good afternoon.
How you doing today?
I'm doing well, man. How was your weekend?
Good.
Good.
That's crazy. I'm getting an echo. Can you hear me okay?
I can hear you fine. I apologize. Yeah, but I can hear you fine.
Cool.
Everything sounds good. I think, and I got no echo, so I think we're good to go if as long as you're okay.
Yeah, no problem. Absolutely. So, kind of interesting. Generally speaking, you were talking about the dollar rates and so forth, and
Sure.
so what I thought that we would do today is talk about King Dollar.
Okay, here we go.
And a little about gold. So this way, this will provide you with some additional things to consider in your analysis about what the U.S. dollar is doing and everybody else that is out there. So the first place that I wanted to start was just simply kind of more of a fundamental aspect, so that because I want to tie the fundamental into the technical picture that we're taking a look at. So this is a snapshot that I took off of the Fred database out there, and it shows that the U.S. monetary base as of June 24th was about $6 trillion, $5.6 trillion. So in essence, they're saying that is the float of money in the market. Now, the interesting thing there, and I don't have that printed on this, but people can do just a quick Google search, and what they'll find is that the estimate by the Federal Reserve or Bank of International Settlements or different organizations out there, they say that somewhere between 50 to 70% of U.S. dollars are held overseas.
Okay.
And in that case, a lot of that is really in the pillows kind of stuff, under the mattress. And that's because of the people that have lived throughout Europe through their lives have seen currencies canceled. If you travel overseas, there's not a country that I've traveled to, and I've been to many, many countries where you can't take a U.S. dollar and buy goods with it. Yet, you try to, be in the U.S. and try to pay for your dinner with euros or yen, it's not going to happen. But
Sure.
I've personally done it, So in any event, the Bank of International Settlements, they also estimate that there's $120 trillion worth of U.S. dollars, of U.S. debt that's out there. Now, of that $120 trillion, and your dad will love this, they estimate that $18 trillion of loans have been denominated in U.S. dollars issued by foreign countries or corporations. In other words, you're in Europe, you want to raise capital, so where do you come to? You come to the center of capital, which is U.S. dollars, and you issue debt denominated in U.S. dollars. So, is that a big deal? Well, why does it matter? This is a chart that shows the euro versus the U.S. dollar. I flipped it. And so that people can understand, if we go back to 2008, which is when the U.S. dollar bottomed out here. If we take a look at what it cost back in 2008 to buy a dollar, that was 63 cents. So if you just take a look at the bottom line out there, you'll see it's 63 pennies, 63.6341 euros bought $1. Fast forward to this afternoon, and it's 85 cents. So in other words, if we issued a debt denominated in U.S. dollars and we're over in Europe, we've got to come up with dollars. Well, the way that we do that is we convert our euros to dollars out there. And so it's cost now 34% more to service the debt, to pay back the principal. That is a gigantic thing that people need to understand. That's just the euro. If you take a look at the dollar versus many other currencies, it is substantially significantly different, where it's way more than 34%. It's like 100% out there. So, it's important to understand. So you figure we've got, in essence, $3 to $6 trillion chasing after 18 trillion. Because at 18 trillion, unless those foreign companies are going to default on their debt, they've got to come up with that money. And so it's going to keep King Dollar alive and well for a long time. Anybody that's saying that the dollar is dead just doesn't understand the basic fundamentals. Right, and I get that. It's you got to pull this data together, to try to understand it. And here during the show, we are, or at least for myself, I'm typically taking a look at technical patterns. So let's take a look at the technical pattern. Here's the U.S. dollar from a quarterly standpoint. And I've drawn in here the A to B equals CD pattern to the upside. I've drawn the exact candle. It's a quarterly time frame that we're looking at that identified the sell the D point top. What that has led to over these quarters is nothing more than a sideways consolidation. And we just tested, and at this stage here, we've rejected the bottom of that consolidation. I've also drawn in a little bit of a descending price channel line out there. So both of those have kind of met at the exact same area. So very much a potential for a bottom inside the U.S. dollar. If I take the U.S. dollar daily chart, that's over the upper left-hand corner here. A little bit hard to see, but you can see at 97.31, the numbers in red. That's the top of the daily profile, in which we were trading at 97.81. We're somewhere near there, I'm sure, right now. We're generating a daily profile change in trend. That's a bullish signal out there. We've got the monthly, which is the lower left. We just kind of went through that, testing this descending trend line out there, combined with what we saw on a quarterly basis. And then if we take a look at if I take a look at the U.S. dollar on an annual basis, this is kind of an interesting pattern here. If we come back to that 2008 bottom, what we're going to, so the numbers, the data on the bottom reflect consecutive years higher and consecutive years lower with regard to closes. But what's interesting is that since the bottom in 2008, what we've seen here is 1, 2, 3, 4 single years where we had retracements and then the market moved higher from there. Well, where are we in 2025? Guess what? We've got another one of those potentially 1 year retracements. So my take on this is that until the pattern fails, it works. And at this stage here, I'm looking for a bottom inside the U.S. dollar index. Well, shoot, we just went through the U.S. dollar index showing at the bottom of consolidation, bottom of a channel line, a daily profile change in trend, and here if we take the weekly time frame chart, we've got one of my Rhodes momentum indicator bottoms. So it's one of the workshops that subscribers can go through to understand that pattern. That helps us to identify tops and bottoms. So this is suggesting that the bottom may in fact be in. So if the dollar bottom is in, what's that mean for gold? And I think that's a great question, because when you take a look at these charts here, I've got the yearly chart, monthly chart, weekly chart, daily chart. They all have either TD9 count or Rhodes momentum indicator tops. So we've got gold potentially topping at the same time that the U.S. dollar index is bottoming. Our focus on gold, though, no matter what, should be on the price point of 35.39.30. That is the April 22nd high. If price closes above that, it's going to negate all of these topping patterns on the daily, weekly, monthly, depending on when the actual close takes place out there, but it could negate all of these topping signals, and then that would suggest that even though the U.S. dollar index is going to move higher, so too will gold. And we've seen plenty of times where that has unfolded. In fact, if we take a look at it's important to pay attention to the geopolitical news. This chart here, if you take a look at gold's real rise, it really began, Tommy, in earnest on that attack on Hamas on October 7th. I've got the Russian annexation of Crimea back in 2014. That really didn't do much to gold. I've got Russia invading Ukraine over here. That didn't do much to gold. So it's important to pay attention to these geopolitical events. Last thing, gold topped in all of the Middle Eastern currencies on the exact same day. So time to be paying attention to that. So that's my take on the U.S. dollar.
I love it, man. Dollar at 98.09, and yeah, some dollars in yields, right? Huge right now. Steve, thanks so much for the education. Great numbers, man. We appreciate it. Look forward to the show tomorrow.